Welcome to the webinar. You have entered as an organizer and may now speak to any other organizers or panelists on the line. When you are ready to begin the presentation, press the Start Broadcast button on the GoToWebinar control panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
Good morning. Let's see if we can get this thing started here. I'm going to click a couple of buttons. And I got to share my screen. Let's do that. Screen is shared. Good morning. It's a little early. It's 11:46. Sounds like you guys could hear me okay. This is Jim Cagnina with Infinity Futures. Thanks for coming today. We're going to talk about trading tech and trade management techniques, stuff like that today. Let me get my screen situated here. We don't even need the website. No PowerPoint today. I know a lot of you guys are going to be seriously disappointed in that. Let's just do a sound check, make sure everybody could hear me okay. Just type in a yes, Jim. I could hear you okay. Just to make sure you could hear me okay. Actually, you know what I'm going to put up? I do want to do... Good morning, Michelle. All right, good. Yeah, so one thing I forgot to put up here. I'm going to go to econoday.com for my calendar. You can go to CME Group. You can go to Market Watch. I mean, you can go to Forex Factory. There's all sorts of different places to see economic releases. I like Econoday because I don't know, they're the first, and everyone else's data is based on them. But CME Group does have the international stuff. But so we got some Fed chair stuff coming up, factory orders coming up in 10 minutes, pending home sales index, a couple other things, EIA petroleum status. You can click on the full calendar, and we'll see how this matriculates. Jerome Powell speaks, and as you guys know, I'm a big believer in, the Fed is driving the boat on these markets. So I'm going to keep this off to the side, and we can talk about it. We did have an interesting trade percolating that never materialized, and I wanted to talk about entering the market on a stop, right? Entering a market on a stop is one of the trade ideas, one of the trade techniques you could use to actually get into the market and take advantage of a couple of different things: support and resistance, where the stop hunters may be situated, momentum, the changing of time. What do I mean by that? Changing of time. The things happen on the half hours and on the hours. 8:30, 9, 9:30, 10. Different automated strategies and systems and ideas kick in on those transitions. So you can see different market behavior based on time, which you often do. So, for instance, you're not going to see the same automation happening at 8:53 a.m. as you are going to have at 9 o'clock. Those segments of time actually trigger different things. So I have a ES and an NQ. We'll focus on ES right now, for now, and talk about some different kind of trade ideas. So just real quickly, monthly, yeah, we had that big rally. Then we had a bunch of huge volatility here at the end of 2019. You can see it better on a weekly chart here. So what was a long-term bull market became a dangerous sideways market. Now we're railing back up in bull market mode. 2019 bull market mode. Let's do a daily chart here to kind of show it a little better. That's pretty significant, right? I mean, we're talking, you don't have to be a data scientist to see the trend is bullish here in the U.S. stock equity markets, and we kind of know, we think we know why, right? The Fed policy change, that's my big one. It looks like things like the China tariff is going to get resolved. It looks like Brexit's going to get resolved peacefully. You know, we had some India-Pakistan drama recently, which is not good, and it's cause of concern and could affect the market. So we got to be careful with that. But let's kind of spread this out a little bit and look what's happened the last few days. Remember, on any given trend, bullish trend or bearish trend, you have days that buck the trend. You know, you got some red bars here, you got a red bar here, you got a couple red bars here, and this almost looks like a Bill Williams fractal pattern forming right here at the top. We certainly found sellers up here a couple days ago on Monday, Sunday night Monday, more sellers yesterday, and then here we're kind of in no man's land. So I'm hesitant to say, hey, we're going to look for places to buy today. I think we're looking for places to be sideways today. And here's my 60-minute chart. Got some volume indicators here. I like to see when there's a big bar, big range bar, and I like to see when there's a lot of volume. And sure enough, it corresponds between 8:30 and 9:30 and 10. You know, that's not surprising. It's when the U.S. equity market's open. So you're going to get the volume and you get the price spikes, but you also get price spikes other times. So you got to, those are my orange candles. They're big candles. And if you don't know, you could kind of, and this is recent, I found this thing called the chart calculator, and you could literally go top to bottom on a candle with the chart calculator, and it tells you the difference in points and the dollar value. $512, that's a lot. Contract value per contract for that candle. So that was a significant candle that day. Okay, so moving forward here, you know, again, we had a rally on the open, and we had a lot of sellers push this thing right back down. Here's a 30-minute peak, and I drew a line here at 27.93, and my thought process was, you know, we had a lot of touches at that level. Some touches here, some touches here, some touches backdated here. And my thought process was, well, let's see what happens earlier today. Let's see if we can get a breakthrough. The breakthrough trade idea would be this. We're not going to get a breakthrough probably during the duration of this particular webinar, but the breakout idea would be if we, instead of going short up at the top, if we break through this 27.93, we would buy on a stop. And let's say the buy on the stop is, we'll give ourselves some wiggle room, 24, let's say 24 and a quarter, right? 24 and a quarter. 24 and a quarter. So we would be buying on a stop with the idea that, hey, we're going to break on through this area of resistance, and there'll be some stop hunters maybe to keep momentum going up. And I don't know, let's say we would be looking for a six tick profit target. That was a trade idea. That was, I don't know, it was good until about 10 minutes to right before I logged in. So 10 minutes to, and, you know, we didn't get there, right? So the good news is the second best thing that you could happen to you is you don't get filled. Right? You don't get filled. The best thing that could happen to you is you get filled and you make money. The worst thing that could happen to you is you get filled and you lose money. So it's hard to get your mind around the idea that a trade idea didn't happen. It doesn't make it any less valid of an idea. You know, maybe 1 out of 10 times it happens. Maybe it doesn't cost you any money to put stop orders in and limit orders in that don't get filled. You know, there's no commission for that. There's no exchange fee for that. So it's okay to do that. But this would have been a good idea should we have had follow through on the open, right? We didn't have follow through on the open. Sellers came right back down and drive this thing back to where we started from. I'm going to go ahead and cancel all. And if you're not familiar with anything on the dome that I'm doing today, just simply type it in and say, hey, where'd you click? How'd you get that? What are you doing there? The follow through on that trade idea, let's say we're buying on a stop again. We could do an OCO bracket and surround it, right? We could surround it with an OCO bracket. So if we were to get filled at 94, we'd have a profit target 8 ticks up, a stop 8 ticks down, which is an OCO. It's automatic. This whole thing would be automatic. Okay, that's when they say OCO or order cancels order. We get filled here. This bracket goes around the fill at 94 even. We have a profit target 8 ticks up and a stop loss 8 ticks down, and you could change that to whatever you want, right? You could change, you could preset. This is a preset. You could preset this to whatever you'd like, based on your practice and the science and whatever your methodology is, right? So let's cancel all. So oftentimes also in this market, we have sellers come back in and then we push back up. And these are times when I look at the market profile here. And we're going to go to market profile. Let me open this up a little bit more. Okay, this is just a straight up market profile. Let's go market profile plus volume. I got a market profile plus volume, and you can see I have it cut in half, right? I have it cut in half. Not in half, but I have it split. The H session, which is about to change, is from 8:30 to 9. And sure enough, we're in that 8:30 to 9 period. So I like to split that from the night session, right? I started this at 5 p.m. Chicago time. I'm going to be talking Chicago time here, other than that Econo Day calendar that we saw. And don't forget, there's a number coming out right now, too. We got to keep our eye on. Michelle asked, are we pre-webinar or actual webinar? We've blurred the lines. We're breaking new ground. I wanted to talk. The tough part about this is, you start a webinar at a certain time, but things are going on and you want to show them and you want to talk about them. So I understand people are just coming in here right now, and I appreciate that. I do want to remind everybody trading futures and options on futures involve substantial risk of loss, not suitable for all traders and investors. If you want to talk about risk capital, and all that stuff, give me a call. Give one of our customer service reps a call. But we are live in our webinar right now. We're not gonna. There's no PowerPoint today. There's no anything like that. I'm just going to talk about my observations and some trade ideas and some order management techniques. Rob, we'll get to some indicators in a little while. This, in my opinion, what we're looking at right now is coupled with knowledge of what external forces are out there, like socioeconomic, presidential announcements, Fed speeches, economic releases, and all that stuff. You got to be aware of that. But, the market profile is an awesome way to go. And we see the point of control last night, or actually pretty much today, was down here at 86. And oftentimes we do have the market kind of gravitate toward the point of control throughout the day, especially if it's going to be a normal distribution day like yesterday. Yesterday we had a really sweet, we had a crazy volatility yesterday. We had some crazy price action yesterday, but at the end of the day we settled in a nice bell-shaped curve, slightly biased to the downside. And I wouldn't be surprised if that happens again today. But just to draw some points of interest, yesterday's point of control, let's draw that line. We're going to make this red. And we're going to duplicate this. We're going to go ahead and do, let's see, copy and adjust. So we're going to copy and adjust, and we're going to go up here to above prices below value, and we're going to do it again. We're going to copy and adjust, and we'll go down here. So now I have kind of yesterday framed here. So those lines represent yesterday. Today we're here, point of control, sure enough, it matches yesterday's transition between value area and points below value. Okay, points below value. And I'm feeling some negative vibes here coming out. Now, if we were some trade management concepts, if you wanted to take a position right now, long or short, let's say we're short, then my stop would be up here at the transition between prices above value and the value area. My target would be prices as we approach the bottom of the value area, right? So that would be how I would frame the trade in terms of a market profile point of view. You can go back to the 30-minute chart and see what's going on. And momentum is slowing down. We're approaching the 100 line again, and it looks like we have a lot of sellers. Not only was the effort to go higher thwarted, but we have continuation on the way down. So now in my mind, I'm thinking, all right, I want to go short here, but we have to be careful to make sure we're just not in a regular small range market profile day, right? The 10 o'clock news has come and gone, and nothing's really done anything. I don't even know what the news results were. Now, you can see that there's no price action. Okay, so the bullish idea is you would buy down at the transition area. The bearish idea is you would go ahead, and try to sell. The bearish idea is, sell within that area. But if you look at this initial balance, we're still in the initial balance area, right? Initial balance means where we are trading in the first hour of the day. Or you could set it as the first half hour if you'd like, or the first hour of the day. And on a normal distribution day, we trade above that and below that initial balance. And on a day like today, we would do it. And on a non-normal day, then we're going to either trade below, spend all day below, or spend all day above. All day above. I just got an alert about someone testifying in Congress. It's not going to matter too much in the market right now. Michelle says Paul is testifying before the House now, but he testified in front of the Senate yesterday, so there'll be no surprises. Yeah, you're probably right. He's a very balanced type of speaker. And the beauty of the market profile right now is we are right at the point of control, and I would call the point of control in this particular case market happiness. Right, market happiness. Buyers and sellers are in equilibrium over a long period of time. We had an 8-tick handle, not even 7-tick handles to the top of that. We have 5 handles to the bottom of that. And so let's just go ahead and throw a trade idea out here on the bearish side, right? And I like to do a 2-lot, more than one. Don't over leverage, of course, but more than one. And if we just eyeball, let me just do that with the crosshair. We're right here. We're prices below value for this morning, but we're right here. So we would look at waiting for a pullback to try to get short again. I don't know. Let's just pick a number here. Maybe right here. Right here, 87 even, because you see a lot of activity here, 87 even. And then let's go ahead and put the order in on the trading ladder. I'm going to put a limit order in, right? So the mouse is smart. You move over to where you want to go and you click. Okay, so now we have a 2-lot. We have a 2-lot order. Now, we're not done yet. We have to decide, hey, in the event that we do get filled here, in the event that our patience paid off, then maybe we want to go ahead and put a stop in, which we do, of course. And at 87, where would we put it, right? If we're filled here, let me move this out of the way. Oops, my bad. Where would we pull it? Well, let's start with the 30-minute chart and see what's happened here. We had an awful lot of sellers up here, but certainly there's a level up here at 92.50, which would be, if we trade up there, it would be unique for today, right? It would be unique for today, and that's for sure we would like to get out there, right? 92.50. So I'm going to do that, and we're going to refine this with the market profile in a minute, but let's get something in, right? Let's get something in. All right, I'm going to put 2 there. Now, that's a pretty big, it's a pretty good gap, right? That's 5.5 handles, and so we want to kind of refine that. And we're still not filled yet, and I'm not worried about it. We either do or don't. And let's get rid of all of these red lines because they're annoying me. Let's see. Could I just erase them all? Erase drawing. See, we'll leave this one up here for now. So yesterday's point of control was 92, which is a little south of where our stop is at 92.50. So if you're conservative and you're thinking, well, this is a good target, we're sitting in the right spot right now. But what we're going to do is, if we do get lucky enough to get filled at 87, we're going to go ahead and try to take one off for a profit and then adjust the stop accordingly. Oops, I had a bracket in. I shouldn't have done that. My bad. That's okay. I'm just going to cancel all, and we're going to go ahead and put that stop back up to where we had it. Okay, so now I'm thinking to myself, we're in the market. I want to get one of the contracts. I want to get one of them in the can. I want to take profit on one of them. Where would we go here on the chart to do that? And I want to get at least 4 ticks out of this thing, right? If we're lucky, at least 4. But let's say let's focus on right below the point of control, so 85 even, 85.25, something like that. And let's just go ahead and let me take this auto off. And let's put a 1 lot there. We want to get out of one of the contracts, because then what we're going to do next is we're going to cancel the 2 lot stop, and we're going to move it to break even, and hopefully we get a run, right? Hopefully get a run. And you could even do that. If you wanted to make it even tighter, right? If you wanted this to be, 4 ticks is enough for me. And this could be a 1 lot, 2 lot, 3 lot, whatever size your account can handle. But let's kind of move it down a little bit and be patient and see what happens. Now, we got to keep an eye on things, right? We don't want this thing to get out of hand. We have kind of like an equal and opposite on the 15-minute. And what I mean by equal and opposite, that's if you combine them all together, it almost looks like a doji. But let's see, where's my rectangle? You combine these two bars together, it's equal, and they almost offset each other, almost, right? They almost offset each other. Okay, so let's go back here. I think we got filled on one. All right, so we got filled on one of them. So let's go up here, cancel this. And now we're short one only, right? We're short one only, and we want to put our stop here at break even plus a tick. All right. In this trade idea, this trade technique is you're hoping that we just run, right? We have a risk-free really trade right now, because even if we get stopped out on the 1 lot, we ended up if we get stopped out on the 1 lot, we ended up breaking even on that 1 lot, and then on the other lot we actually made a gross 87.50, right? A gross 87.50. So now we do want to we don't want this to be forever, right? So we want to go ahead and say, all right, what's our potential here? What is our potential here? And there's 2 thoughts. One is just let it run and hope we break through, we make new lows. Or 2 is, hey, we are gonna have a normal distribution day, so we are gonna trade in prices below value here. So let's not be greedy. Pigs get fat, hogs get slaughtered. Let's just be pigs and try to get an 82 maybe, or an 81.50 or something like that. So let's go ahead and do that. We'll put one lot here there, and we'll see what happens there. Now again, you could let it run and hope for the best. You could trail your stop down. You just click and click. That's an easy thing to do also. If you'd like, or you could just get out and say, you know what, $200 is plenty for this for 9 o'clock. I want to go to Starbucks now and spend my $200 on a mocha. Oh, it seems like it. How do you get the volume on the dome? I'll show you that. It's pretty easy. You're just going to go to the, I got this squished up here, but there's a properties button here, and this volume thing is over here. You highlight it and you hit add. So, I might have just messed it up, but add and then hit OK. All right, so we got filled on that. Now remember, don't forget, right-click this one and get out of there. Right-click it, cancel it, hit cancel all. Make sure everything is canceled and flat. I get calls all the time. Hey Jim, I only sold one, but and I got out, but I'm still short one on my statement. And we look at the log files. They're like, all right, it looks like you got filled on one way up here. You forgot about. You forgot about this one. So that's good trade practice, good trade management. Gary, this is a great, this is a great question. I appreciate the question. Do you have performance history to show us? And no, because I'm trading on a simulator. There is no performance history. You know, it's easier to do on a simulator. There's no demons in my head. There's no money flying out of my pocket. Um, and so the answer is no, I don't. Um, and on that note, uh, keep in mind, that's a pretty funny comment. What was I going to say? No, I lost my train of thought. Past performance is not indicative of future results. That's what I was going to say. You see that all over the place, and that's not a fantasy. That's true. You know, when if you're in a trading educator room, there's some good ones and some bad ones, and they're trading on a light blue background. That's either demo mode or sim mode. That's not real money. If it's a gray background, it's real. It's good. But there's certain regulatory mathematical ways to display track records. So keep that in mind. You know, a lot of these track records that people publish are a red flag. Be careful. If you're not sure, you want my opinion on somebody or something, give me a call. I'd be happy to talk to you. Jim said, I'm killing it. Remember, I'm killing it on a demo with one trade. But the idea is here, put 2 units on, or put 3 units on, or put 4 units on, and then scale out of them. You know what I mean? Scale out of them and lock in some P&L as you go. It's a really good trade. I learned that from Dan Grams in 2002 or 2001, a long time ago, and it could be powerful. So where are we at right now? It's 9:14. Now this is still, I consider this still the open. I mean, yeah, we open at 8:30, but if you look at, let me move this out of the way. If you look at my color charts, you have some price action and you have some bigger bars and bigger volume, you know, up through 9:30 and 10. Up through 9:30 and 10. And I know. If we would have kept the one lot on, things would be great. But you can't think like that. And the reason is that trade's done. It's over. You know, you're going to do a post mortem on it later to say, what, you know, did I do the right thing or not? But right now you're in the heat of battle, right? So you're looking for another opportunity, maybe. And maybe there's not another opportunity today. Maybe this is it. To be honest with you, you know, this could be it. Depending on what happens the rest of the day. I don't want to talk you out of a trade, but you know, it's okay sometimes to put the mouse down, take your hands off the mouse, take a break. But here we have some good stuff going on. So let's take a look at we still have this candle here. We found buyers down here, right? You see this wick? How could I where's my ellipse? Found some buyers down here, and we're still in this area here. So this is an important area. Are we going to retrace back up, or are we going to get back to the point of control? And the point of control, you know, is way up here still. We're still in the initial balance period, H and I. When we get to J, then we're out of that initial balance period, and we can start thinking about what the market profile situation is going to be like for the rest of the day within this part of the profile, not last night's part of the profile, but this part of the profile. So if you're really anxious right now, I don't know that I'd recommend this, but if you're really, you know, we want to see if we're going to make new lows right now. And we're only 3 or 4 handles away from new lows right now, which, you know, in my mind is we're still bearish right now. You know, we're still bearish right now. We'd be looking for a pullback, another place to sell, right? Another place to sell. So, and right now that place is the point of control. That place is the point of control. So if I were going to place a second trade right now, I would be looking at selling at 86 even. Now, the prospects of hitting that in the next 5 minutes probably aren't huge, but it's okay. Remember, when you put these limit orders in, let's do a 2-lot again. Make sure auto is not checked down in the lower left. You're in a live market. You are in a real, you know, market here. The data is real, guys, by the way. But in a real market here, it's first come, first serve. So you are in line right now ahead of anybody else who might have a limit order in, or it doesn't have their limit order in yet at 86. So if Michelle was going to put a limit order in right now, she'd be behind me in line. She'd be behind me in line. Dennis, we'll get into that in a second. Dennis is asking, do you use indicators like RSI, MACD? Absolutely, you can. And the only indicator I'm showing right now, to be honest with you, is momentum. This is the only thing on my mind right now is momentum. You could substitute this with whatever type of momentum oscillator, moving averages you want. And you should. You could experiment with that. I don't have these cluttered right now. I'm focusing on the candle and the market profile. And this is the only thing I'm interested in at this very minute. And that's just me. Everyone's different. But absolutely, many traders in the futures market do some, significant analysis with RSI and MACD. And these charts are great and customizable for those two indicators, among other ones. If you haven't tried these charts yet, you got to, I don't know, I'll use the word gazillion, which is probably an exaggeration, but you have a lot of different things you could not only add to your chart, like the Keltner channels, linear regression, all these different types of moving averages, but then you could actually modify them once you add them. You could customize them once you add them. So there's a whole bunch of stuff here to play with. If you haven't tried a real-time practice account, just go. I don't even have a website up. What's the matter with me? Just go here, click on this Learn More button. Go to the homepage, click on the Learn More button, and you get this form you fill out with an automatic email which sends you the password. I don't know. So, but yeah, you got to pick your poison, Dennis, and then, become a master at it and see patterns and stuff like that. RD, email me if you want a copy of this chart book. It's pretty basic. I have a monthly, I have a weekly. The key is when you're setting up some of these things is to look at your time, what time you want to start. Oops, my bad. What time you want to start the actual, oops, I got a daily. What time you want to actually start the analysis. So you go to studies. Slow down, Jim. Chart settings. So this actually, I would change this to 1700, which is the night before, 1600, which is the close today. We could change the number of days to load. We could go ahead and use the volume-based or the date rule. I like to use the volume-based rule over date. I don't know, let's make this 60 just for fun. Hit apply and OK. And that's how I would actually tweak these particular charts. It's not going to give you much of a different view, but I like to start the day because this is a 60-minute chart, right? Every 60 minutes continually plots up here. But what I just did in the 60-minute chart is particularly important for the market profile. Gary asked about another platform, another significantly inferior platform, which I won't even dignify mentioning the name of. The answer is no. This is our platform. This is our brokerage firm's platform, and this is where you have the performance. This trading ladder is where the performance all is. You could use any charts you want. If you want to use that that platform for charts, knock yourself out. But this is where we have what I would consider a speed of data and a speed of trade execution advantage over many. This is operated and maintained in-house at our parent company, Transact, and you go over there and there's a bunch of really smart tech guys keeping this thing rolling. And because of that feature, it's not a third-party thing. We don't have to charge you for it, right? You're not charged to use the trading ladder like you are in other places. Your transaction costs are tough enough. The bid offer spread's tough enough to overcome. We don't want you to have to pay a platform fee. As a matter of fact, the charts are free too if you do 10 round turns in a 30-day period. So most people get everything for free. Sorry, I just had to throw that in. Look at my bubble, right? We're like trying to, it's like we're drilling for oil. We're trying to get into the bubble, but it's not. So we're definitely having buyers here in the bubble. The bubble is having buyers. We'll see if it holds. It's only 9:23. We got plenty of time. Let me get this out of the way. Michelle asked about the orange. Let's take a look what those are. The orange, I got a couple of color alerts, okay? So the orange is, in the subgraph orange, right? So the orange is when a bar is a certain size. The high minus the low is greater than 10, or the low minus high is greater than 10. And every market's different. You got to adjust these numbers, but that's the number I came up with because I want to see the big ones, right? I want them to stand out, the really big ones. So that's what that number's about, and that's not ticks, that's points. And then the color, the gray background is just, hey, any bar where the volume is greater than 175,000, I want to see it. And again, you could change that parameter to whatever you want, 180,000, 200,000, 150,000. You could do it a couple different times. You could have a whole bunch of different colors. So those are the things that I want to see, right? Those are the things I want to see. And as we penetrate lower into this bubble, I'm going to be more bearish right now. So we'll see what happens here in the bubble. All right. Any other, what questions am I missing here? Jared asks, do you have a webinar or more info to study about using the market profile? Also, any way to access this chart setup? I'll set you. All right. Two things. One, you want to do a webinar market profile? Do one next week. So next week's will be market profile. Any way we could access this charting setup? Yeah, just email me, Jared. I'll send you the chart book. If you got to have the Sierra chart downloaded, but I'll send it to you. Gary, yeah, you could set this up. I don't know what your programming skills are to do that, but if you have some programming skills, you could do it. Eric, unfortunately, the answer to that is no. Apologize for that. I wish the answer to that was yes, believe me. Charts are free for 10 round turns in a 30-day period. And for most of us, most traders, it's such a low barrier that it's not a problem. Otherwise, you're only charged $19.95. It's not like you're going to get a $300 charge, right? $19.95. That would be probably one of those breakfast sandwiches, a grande double shot latte, and a blueberry muffin. I mean, that would be your monthly charting fee, right? I wish I owned a Starbucks. Yeah, my email address, guys. I'm going to type it in here. It's easy. And actually, this is actually mine. I get it. It's trade@infinityfutures.com. Trade@infinityfutures.com. I'm going to send it in the chat box here for everybody to send. And again, my name is Jim Cagnina, or just Jim or Cags, or you can call me whatever you want. I don't care. All right, do we have any other questions right now before we take a peek back at what's going on here? We're approaching 9:30, and 9:30 is a good time to look for price action. 9:30 is a good time to look at price action. So we're in our bubble. Let's go over to the market profile, and we're still in this initial balance. We're about to get out of it. Or initial load, initial balance. It depends how old you are. They call it different things. But it's just basically this light blue line just highlights the first two periods here, right? First two periods. Now, if you're gutsy and you're looking for a pullback, you're going to buy here and put a stop below at the low. I wouldn't do that. I would look for places to sell also. And another transition area is right here, right? So we have, let me draw a line. Don't be afraid to draw lines. You could always erase them. They're free. They don't cost any money. Yesterday's low. Last night's low, the value area of this morning, transition line between prices above and prices below. This is an important area to me. So now I'm going to change my whole point of view and say, listen, I'm going to look for places to sell, sure, but it's going to be closer to this 27.81, and I'll put my stop up here Let me put a line here or two. If we start getting back into prices above value. Okay, so we have a trade idea here. We just threw a limit order in. I'm going to cancel this order, and we're out of line now. We are out of line now, and I know what you're thinking. Why would you sell at the low? What's the matter with you? It's a good place to consider selling. There's a lot of action here. So let's go ahead and say, 78. We'll put this down to 78, right? We'll put a 2 lot there at 78. See what happens in the next, I don't know, couple minutes. And that's another trade idea. I'm not a fan of trying to buy lows because you can't. I mean, you could if you're lucky, but you don't want to put too much luck into this thing. I mean, you're going to find areas of support for sure where you want to buy, but not the low price. 27.74.5 is my guess. Let me move this out of the way for a second. Whatever, right here. We're not going to be, you're not going to buy it at 7. You could get lucky. But if you're trying to get the exact low, here, let's do it more scientifically than that. You're 75 even. Well, good luck. It's tough. We have 3 red candles in a row. That's interesting. This market is finding, and when I say we're finding buyers, let me get my, I'm not very coordinated today. I apologize. I want my ellipse. We're finding buyers down here. We found buyers here. We found buyers here. So we don't want to be short until we breach something, until we establish more momentum. And the trade we have now is kind of a retracement idea, right? It's kind of a retracement idea. And this also gives us clues on where we would put a stop. This candle formation gives us clues on where we'd put a stop. We have a high right above 2782, the top of this candle. So if you can envision what this candle could be, if we were stopped out, it would be a green candle coming on, all the way back up to here, which would suggest maybe more of a normal distribution day. Okay, but we picked our poison here. We'll see what happens. I'm comfortable we're going to get this. We might not. And then our stop's going to be, just above that 82, right? 83, according to my market profile guide here. So I'm going to even put that in now. It's pretty tight, but let's go ahead and do it. We'll put this, put a stop in at 83, right? So stop sign is a buy stop, right? We're going to be short. It's a buy stop, or maybe we're going to be short. Maybe we're not. One of your natural inclinations is going to be to chase this, right? It's going to be just to move this limit order down to. You don't want to miss it. I don't want to miss this trade. I don't want to miss this trade. And so the chemicals in your head are creating this desire, this need to not miss something. And this is the crux of futures trading. I don't want to miss it, so I'm going to move my limit order down to get filled. Again, second best thing that could happen to you is you don't get filled. Stick to your guns, stick to what your idea is, and after a certain period of time, if you could change your idea, but don't chase price for your original idea. Does that make any sense? I don't know if that does or not, but RDS, can you make the pending orders and trades show on the chart? Yes, you can. Can you place an order directly from the chart? Yes, you can. You could sync the DOM and the chart together so you can see your orders on both sides and move them around. Since I do so many lines, I don't like to confuse myself too much. And this is a much more efficient way to place trades. I mean, we're just clicking and clicking. I just cancel that order and replace it just like that. And when you see this number pop back up in this column, that means the exchange has already got it and has sent back an order ID number for this order. And it happens in a live environment that fast. Hoping your internet connection is good. So sure enough, we're pressing down. I mean, this is a bearish day for sure, at least for now. We're in the J category right now. We're in the J category right now. And oftentimes when you see this setup, let me get my ellipse out again. We'll spend the rest of the day in here. A lot of times, when you see the initial balance or initial balance not being breached on the downside or not being breached on the upside. In other words, this light blue line, this teal line, cannot get any bigger anymore. It's done. It's fixed. This has established the initial balance. So when you see a profile developing down here from 9:30 to 10, oftentimes you have all the trading activity down in this area. And again, you got to be careful. There's news events. There's things that's going on, and you got to pick your poison. Now, keep in mind also, this afternoon, that could change. So I'm talking about this morning, before noon, before lunchtime. Let's see here. Michelle, were you going to talk about the differences in automated trading at different times? I'm Central, Bruce. So, I don't know. I mean, if you want, I mean, I don't, it's automated trading guys and gals. I'm going to use the word guys, in a unisex way. So don't, I don't want to get a nasty email saying, you said guys and I'm a girl trader. But, there's all sorts of different ways to program, to create an algorithmic trading system. I mean, there's institutions that do this full time with a whole bunch of programmers, developers, coders, whatever, mathematicians. Okay, but let me keep going here. I'm on a roll. Mathematicians and astrophysicists and people who are professionals at time series analysis and probability stats. People way smarter than me, and so they're creating these mathematical models that gets translated into a trading algorithm, which triggers trade entries and management throughout. These things happen in all different ways and sizes. At the end of the day, though, we're looking at supply and demand. We're looking at where buyers are and sellers are happy, and we're doing that with a light on what's going on in the macro universe. What's going on is we have some good trade talks going on in Korea. Maybe we could make some friends there and create happiness there. That'd be cool. Alternatively, maybe this whole India Pakistan thing will calm down. Those kind of things you got. That's kind of the framework in which we're looking at supply and demand, along with interest rates and all that stuff. So the algo thing you can't worry about. You can't. You can't. There's nothing you could do about it. There's nothing you could do about it. That's why order flow is a tough thing, right? Okay, so here we are. We got our trade. Now, remember, this is a two-lot idea, right? So we want to now take one off and trail our stop down. So let's go 6 down. 1, 2, 3, 4, 5, 6. And let's see what that looks like. Buy one back at 6. Let's see what that looks like. 78.50. 78.50. 78.50 is right there. From on a market profile point of view, on a 15-minute candle, 78.50 is right there. Also, so it's kind of where we opened. We closed last bar and opened this bar. So, and again, we're worried up here at 82.25. maybe we're too tight, maybe not, but we can get stopped out. We could have a loser. That's what this is all about. KCS, are you saying the first hour of the day, high and the low of the day until right? So I think this this initial balance represents the first hour, right? And I think you have to mind this first hour until the afternoon session, until this afternoon. People are going to unwind positions, take profit, establish positions for overnight, and so that dynamic changes. But right now, that's not the case. People are doing their thing. They're day trading, they're swing trading, they're position trading. And lunch is like, to me, is in Chicago terms, 11 to 12:30, right? I'm not in New York. I'm in Chicago, so that's what it is to me. The other thing here to keep in mind on this particular trade that we have going, I don't expect a lot of momentum down anymore. I think we found our buyers. I think we have our range, and as this trade goes on, I might want to tighten things up. If we're lucky enough, and if we're unlucky enough, then that's the way it is. All right, I lost my go-to meeting setup here. Where did it go? Hang on a second, everybody. Where are my questions? Oops, what did I do? Questions. I think I just turned off the webcam. There's no webcam here. Oh, here we go. Here's the question box. All right. The other thing that's natural for anybody is, hey, I know I'm right. I know I'm right on my trade. I just think I put my stop in the wrong space, so I want to move it because I don't want to get stopped out. That usually ends poorly, by the way. I mean, it's okay to have a losing trade. You're going to have a losing trade. You're going to have a lot of losing trades. So it probably makes more sense to bail early than to move a stop higher. So I would say that's one of the top 10 rules of things not to do. Once you've made up, once you have your mind made up, once you're in it, don't move it. And I'm going to show you one more trade idea, management, entry idea after this trade is done. Or actually, I could show it in probably another market here. Let's go to, so I don't bore everybody to death. Let me just show you this. So instead of a 2-lot, I'm going to do a 1-lot. And you don't want to do a martingale, right? You don't want to keep scaling in, but one idea is you're going to put an order in at a certain price, and when you get filled, then because you're not going to sell the high, right? This 69 will not be the high. So you want to give yourself some room. So maybe you're going to try to sell another one at 71. So your average price is going to be 70, but it gives you the ability to end up with a 2-lot at a better fill price. This is just another trade entry idea. Don't double up like the martingale people do. That's crazy. That's crazy talk in my mind. But averaging in on a 2-lot is fine. All right, I lost my question box again. All right, so there we go. Now we got because you see. So now we're at 70, right? So now we're at 70, and then we can go ahead and put some orders in lower to get out of the 2-lot, and our average price changes, yeah, but that's how the dome works. So keep that as a strategy. And, at any given time, you want to hit that flatten button, this flatten button, you're freaking out, I want to get out. This cancels all your orders and flattens your position. Okay, cancels all your orders and flattens your position. Michelle, maybe I meant algorithmic, automated. This is a non-PowerPoint event, so I was just talking off the top of my head. And we are pretty close to getting stopped out here. Pretty close. It's, you're biting your teeth a little bit. Sometimes it's okay to kind of walk away. Not walk away, but you should never just walk away. If you're in a day trade, that's especially if the duration of that day trade is small. Less than an hour, less than 2 hours. You want to kind of pay attention because there could be another opportunity immediately after this. Okay, so we're out. Now, keep in mind, we want to cancel this stop. Right-click, it goes away, or hit the cancel out button, and it goes away. And so let's see what the market profile does for the next, next while where we're together. And we could see we're still right dab in the middle of this initial balance. Maybe we were premature on our entry. Maybe we weren't. I don't know. Let me show you another thing you could do. You could re-merge these things, right? We split these at H. Right-click and just say undo all splits. Squishes them back together. I'm going to erase this. And this represents now, this profile represents now 5 p.m. last night all the way through the present. And you could see there was a different balance. Initial load, initial balance, from 5 to 6 last night. And we have this, we're trading right here at prices between value and prices below value. So, but anyways, I like to split it. So we're going to go back to what I say, H, right click, split the profile here. Give ourselves some room. And I'm still feeling right now that we are literally going to be I think we're going to be making this our profile. I still think we're going to be making this our profile for the rest of the day, or at least up until the next couple hours. So I wouldn't hesitate to go back in and say, all right, let's try that again. Let's look at the pricing again and let's try that trade idea again. I'm not, maybe I'm wrong totally, but let's give it some more love. Let's put our limit order at a better place. Maybe we won't get filled, but we have this what do you call it, point of control. It's 86, right? 86. So we have from 86. Let me draw another rectangle. And I'm still, bearish right now. I got 86 till now to consider areas to try to get short at. Go back to the 30-minute. See if we see any clues on the 30-minute. And you could do a Fibonacci line if you want here. I don't know if that's going to do you any good, but it'll help you think about what's going on. High to low here. Give you some more areas to consider. 2784 is right there in the middle. That might be a good area to put in another order. Let's try it. 84 even. We'll sell another two there. For now, we could cancel it. It's free to cancel orders. You're not paying any money to cancel orders. And then if we're look at these highs and lows of these candles as places to get out, around 88. And then we could verify that. On the actual market profile. And so we're going to have this fight all day long, right? We're going to have this dynamic all day long. Let's erase this. No, I want to actually erase It won't let me erase. Why won't it let me erase? I'm doing something wrong. Erase drawing. There we go. So now we're back down to our original entry. We're back down to our original entry. How frustrating is that? Very. But that's okay. We had a trade idea. We stuck to our guns. You know, we had one successful one and one non-successful one. Steve says, do you have automated trading vendors that you recommend? If you have an idea that you want to be automated, we do know a few guys who specialize in automating on Sierra, with this charting platform. So, just send me an email, InfinityAT, and I can give you some names you could call. They charge money, but if you say, hey, I'm not a programmer, I want to do this, this, and this, they could help you. All right, so now we're getting into this 949. Let's take a look at this particular view here. Let's take a look at this bar. This was between 9 and 10. This was between, I guess, 1,400 hours, so that's 2 and 2:30. And they're pretty big bars. So there is continual, and you see this not every day, but many days, you'll see, price activity go on for quite some time. And, a lot of times there's no dead time until the market closes in the Emini S&P. And by the way, at 3 o'clock Chicago time, even though the Emini S&P is open until 3:15, then it halts for 15 minutes and then continues on. For another half an hour. Substantively, unless there's some earnings announcements or some weird thing, at 3 o'clock Chicago time, 15 minutes before the halt, it's pretty much over. There's usually not a good time to initiate a day trade after 3 o'clock Chicago time for that 15 minutes or for that following half an hour, in my experience. Yeah, Jared, as we talked, you could sync the chart and the DOM, so you could see the limit orders on the chart also. We're not going to do that today, but you could do that. Simon says, test. Your test is successful. Jared, if you want to try these out real time, go to the website, and you could call somebody to give you a one-on-one walkthrough. You could talk to us, and you'll be assigned somebody to show you how to set up trading from the chart and how to sync the DOM in the chart together. Let's take a look at the market profile here. We're kind of slowing down our momentum. We're still kind of within that bubble here. We're actually trying to get filled above the bubble. And I think it's a conservative thing to do. I mean, if you're not conservative, you could press it, right? You could say, you know what, I want to try to get filled at 83, which is that line I drew originally. Remember that line where we're going to put a stop at? We're going to put a stop at, or we did put a stop at. That would be less conservative, right? The closer you get to the action, the more conservative you are. The further away you are from the action, the more patient you have to be. And patience, of course, is the key here. Patience is the key here. You could, so you could actually put a bracket on this position. I'm going to cancel this 88 for a second just to show you how you would do that. So let's say that you wanted a bracket. Once you get filled, if we were lucky enough to get filled at 84, you could put a simple bracket around it, and you could say, you know what, I want the bracket to have a target of, I don't know, profit target of 10, a stop loss at 6, and you check that auto box, and when you get filled, it goes. If you're already filled in a position and you want to add a bracket around it, the auto won't work because you're already filled. So you could check it and click this send bracket button. This will send it around a filled position after the fact. So don't panic if you forgot to check that auto. You could always resend it or send it. Tim, the charts themselves, you could add a subscription that gives you certain equity market data. I don't know the pricing of that. That's extra. That's with the actual chart people themselves. Our sole focus here is at Infinity Futures is the futures markets. And so that's why we have this package created for that. But no, you're not off topic. That's a good question. Yeah, so that's a good question too. So over time, what happens here, the volume part, these are volume profile bars here on the right. So these move in real time. In other words, as more volume occurs at a certain price, and here, let's do this. Let's take a look at the settings and inputs here. So this is called volume profile. Yeah, I'm sorry, someone asked me, yeah, so 84 was our entry idea. 84 is our entry idea. And then these are all the different settings you could change it to. Ticks per bar I have set at 4. It's based on the TPO chart. A lot of this stuff is default. You don't want to change, but ticks per bar is one of them you could change. It makes the bars either thicker or thinner. And there's other things on here as well. So what I'm going to do, I'm going to scroll down here. There's a lot of stuff. Separate profile from the evenings. Right align the volume bars. I have yes. Display volume in bars. I have none. Let's display the volume in volume bars. Total volume. And you could do bid versus ask volume and all sorts of deviations there. But let's just show the volume. And that shows the volume. Let me stretch this out a little bit so we can see it better. There we go. Within each bar, right? So the graph, the histogram represents just the width based on the number. If you want to put the number in to actually see what the number is, you can. And we have, some decent amount of volume that is developing between 79 and 78. In essence, we're creating a new point of control in here. A lot less volume down here at 77. And there's a lot, but there's a lot of meat, right? There's a lot of meat from 82 down to 78. So this is our new value area developing, if you could look at it that way, for the day session. So the numbers are good to have because it's helpful. But you got to be careful. You don't want to be too cluttered at all. Anyway, how are we doing on questions? Any more questions? Yeah, on the last stop, you could argue we got stopped out too soon, but that's what we were willing to risk on that trade idea. That's where I wanted to go. Depending on your account size, right? Depending on your account size, you may have different parameters for your stops and your targets than I had. So you have to take that into consideration. Now, and also the other variable here is your initial trade size. we're doing 2 lots, which I think is a reasonable thing to do for account sizes less than 10,000. But you could do bigger sizes. You could do 3 lots. You could do 4 lots. You could do, whatever you'd like here. All right, we'll stick. What I want to do, Carlos. Yeah, you could show those numbers in Sierra. I want to see what happens after 10 o'clock. Remember, these half-hour periods I think are important. We'll see what happens in price action then. So we're going to stick around here a little bit. We're not going to end at 10. We're just going to keep looking at this and seeing what happens at 10 o'clock Chicago time. So if you could bear with us, great. If you got to go, I get it. Your time's very valuable, and I appreciate you spending it with me this morning. And I think if you weren't here last time, I'm going to do these once a week. So we'll do market profile next week, more in depth, how to set it up, and some more trade ideas off of market profile next week. We'll do it on Thursday. I got to make sure I don't have a disconnect with my web person, but we'll do it on Thursday. And we could do that one at 10 o'clock. So we'll do that one. Thanks, Dennis. We'll do that one at 10 o'clock. And we'll get into some depth there. But we're almost at 10. We're almost 10 o'clock now. So let's see what happens here. Let's see what happens here. If you want to be aggressive, you would change that entry to probably 83 even. But it's okay to wait. It's okay to not get filled. Bruce, yeah, it's going to be recorded. It'll be on our YouTube channel. Just go to infinityfutures.com and you'll see our YouTube button there and click over to that. I think it's youtube.com/infinityfutures, actually. And again, after lunch, I'm probably going to cancel all these orders and regroup and see what the market brings us at about 1 o'clock Chicago time. 1:15 Chicago time. We'll look at, the close. The close is a different segment. It's a different, there's different reasons for market participation at the close. Like I said, people want to exit positions they've established earlier in the day. Some people, they'll swing trade, right? So they're going to put a trade in the morning or even last night and hold it till the close. It used to be big to have a market on close order, right? That automatically flattens you on the close, and it's not popular anymore. But in the old days, it was old days being the pit days, it was very popular. But you do still have that kind of trade idea, right? Those kind of trade ideas. So market on close stuff happens, as well as people who actually want to have a position at the close, right? So there's different motivations for buyers and sellers in the afternoon and late afternoon. How many people are bummed out we just didn't get filled? It's okay. It's okay. We can trade 83.75s all day long, never get filled. And remember, on limit orders, you don't automatically get a fill, right? So if the market trades at 84 even, I'm in line behind a certain amount of other contracts that have to get filled first. Alternatively, if the market trades at 84.25, I will get filled by definition. It can't go through me without giving me a fill on a limit order at the CME group. So, if we were short at 83, we'd be filled right now. We'd be happier, maybe. I don't know. But that's okay. But you did see that price surge exactly at 10 o'clock. Let's take a look at a better chart to see that. Let's go here and do, I'm going to just change this to, I don't know, we'll take a 2-minute chart. 2-minute chart, right? So let's open this up a little bit. So 2 o'clock bars right here, and that surge that we had right here, well, this is kind of interesting right here, that line right there. That surge we had happened. You can see we have definitely some resistance here at 27.83. That surge happened right at the 10 o'clock minute, if you will. I mean, if you really want to go get crazy, you can go 1 minute. Here's a 1 minute view right there. Boom. And we bounced right off it. So our idea was right. Our execution was off by 4 ticks. Not even 4 ticks. A couple ticks. And that's going to happen a lot as you guys go through this. It's going to happen an awful lot, and it's awful frustrating. But the most important thing is stick to your guns. Don't chase entries. Don't change stops. When you're wrong, you're wrong. All right. I think we'll wait a couple more minutes here, but I think we're good. I think we're done for the day. Any other questions you want to get in, or any questions that I've missed, please retype them in again. The only problem with the GoToMeeting software from an administration point of view is that you have all these windows that are open up all over the place. I have 2 monitors right here right now, so I'm sitting. I could see a lot of stuff, but sometimes it's hard to see questions come in. And oftentimes I will miss them. Apologize for that. Thomas, you're welcome. Bruce, you're welcome. Let's see if we get another second surge here before we call it a day. It's 10:04. Let's take a look at, again, this initial balance. Let me show you how to set that. Am I in the TPO? Yeah. So profile period and initial balance range here. I have it set for 2 periods. If you wanted to change it for 1 period, you can. If you want to change it to 3 or 4, whatever you want. I think the conventional wisdom or the standard way of doing it is setting it for 2, and I like 2. In the equity market. I like 2 in the bonds. Bonds you got to set an hour earlier though, 7:30 in the morning. And we'll go over what all of these different settings means next week. Okay, so I'm going to leave you with that. Remember, trading futures, options on futures involves substantial risk of loss, not suitable for investors. Be careful out there. If you're not sure where you fit on the risk capital thing, give me a call or give your customer service rep here a call. Most of them have been here a very long time, have been watching these markets nonstop during that time, and equally as important, have been talking to traders like you guys on the phone, and have a lot of knowledge, a lot of institutional knowledge. Take care out there. Hopefully we'll see you next week. Be good.